Hey, what's going on, traders? Welcome to my channel. I'm back with another breakdown video. In this video I'll break down a trade which I took on Euro USD, and I'll go through a step-by-step process, so make sure you watch till the end, and where I will be breaking down my whole strategy and my entry technique. So let's get right into it. So this is Euro USD. As you can see, I have marked out this order block, but first thing we need to know is where is the Forex flow. Forex flow is bullish. As we can see, we have a bullish range. This is the high and this is the low. This low is not right because I checked on FXCM and another feed on IC market. There is no fractal down here. So what I can see here is this is the high and this is the low. The price is bullish. So when the market is bullish, when the Forex time frame is bullish, you only look for bullish entries, right? But we also check the daily time frame. As you can see, daily has hit liquidity and price dropped and mitigated something here which is called order block, and it mitigated that and then started going up. Now that it has reached the Forex OB, because when this liquidity was taken, it broke some sort of 1H or 2H there, which means that there is an order block. So you can check on the 1H time frame. I did break this liquidity and it did break this market structure, and this last candle is your block, right? So you mark out this block and you wait for the price to come in, but it doesn't mean you always wait for the price to come in. You can sell it from this level, but as you can see, it did print the double top and price was just ranging, and it came back straight into this block, right? So what I can see here is when price came into this block and it printed these engineered highs, which we call double top, and then it tanked, but it just stopped and mitigated something here. As you can see, this is support level which it mitigated, and then came back up the next day, and it just was hovering around and until this level when it took liquidity. It cleared all this liquidity and then it started dropping again. So I'll be going through how we can take this trade, because if we wait for this Forex to close, there is no way we can take this trade now. It's too late. So what I will be going through is how we can look for such kind of trades. When you are in the block, you don't have to wait for the Forex closures. You just set your you just mark out the area where there is liquidity, and then you wait for these liquidities to be taken on smaller time frames. So let's go to the 1H time frame. As we can see, this 1H candle closed and it cleared all this liquidity, and price just starting to go down, right? But what you need to understand is when this was closed, there was no pullback. Price straight away just tanked. So let's go to the 15-minute time frame and see what happened there. As you can see, this price, this 1H candle when dropped, it was like 14.30, right? It was just half an hour candle right there, and the next 15-minute candle came right into the block, and the last 15 minutes just starting to drop. So there's one way to take, there are two ways to take. One is that you take limit orders, and the second is you take basically manual trades, like when the next candle closes as bearish, you take the trades like that. So I normally do not trade like this. I just do limit orders, because that's where you get the least amount of stop loss, right? So what you need to understand is you don't have to wait for the closure of the candle. What you can do is when 30-minute was closed here, normally I wait for 45 minutes to close before I do something. But let's say when 30-minute was closed here, you go to the 5-minute time frame and see what is happening on the next two candles. These two candles stayed there, so that pretty much was like 14.50, right? Price just ended up 40.50. When this was happened, there was no need to waste more time, because this candle actually took this 15-minute low, and it actually shifted the whole direction based on the 50 minutes. So it actually shifted the direction of the market at the very important place, which is in the 1H block, which has actually daily liquidity behind it, and also it took 4H liquidity. So there was no need to wait for further confirmation. This was all confirmation that price has shifted. So one thing I want to say is this, it didn't print here the fractal low, because what I saw was it was just two candles. It didn't print on the Vanda, but if I check on the FXCM, as you can see, it did print the fractal low, which makes it a 15-minute low, and this makes it a 15-minute high. So this low was taken with this candle, right? So going back to the Vanda, what I can see here is price just came down and came back. So when it came down, it was almost like 45 minutes deep into this. You can pretty much set your limit order right here. So you go with like 3.2, you give it a little bit of room, and then price tagged you in. And the next thing you need to know about your take profit, right? So for the take profit, as you know, you have to like wait for you have to see which liquidity you have taken, and you can go from liquidity to liquidity. So the 4H time frame, considering all that, this 4H liquidity is taken, and the next liquidity is right here, this low. This is your next liquidity. So it really doesn't make sense that this price is only gonna come to this level. It does look like it's gonna take this big liquidity. It's probably also a daily liquidity. So what you need to do is you need to check how many hours are there in this. When you just you are tagged in here, you need to check your hours beforehand, and it's 5.6. Now you need to ask yourself, is this enough, or you should be looking for more, because this is Friday, and the market will be closed, and you will be stuck into the market. So there are many ways you can, either you close all your trade here, or you close 50% or 70% and let the rest run. It's totally an individual choice, and basically I did close here because I didn't want to be stuck into the market. As a day trader, you just take your money and you leave, and there was no point waiting for this to hit here. So as you can understand that 5 hour is enough. So because 5 hour can be anything, it can be $5, it can be $500, and it can be $5,000. So this is the perspective you should have, because getting 5 hour from the market, 3 hour from the market is more than enough, because the thing you have is you have an edge over the market, because you end up winning, or you end up taking profit more than you lose. So I hope you like the video. If you really like the video, if you really enjoyed this process, please give me a like and subscribe to my channel, and I'll make such videos more, and I'll see you in the next one.